The stock market and the economy are about to get whacked this week. I have all the details and what you need to know, as this might possibly be one of the most important weeks that we've seen in a very long time. So let's get into it and discuss what is going on. All right, now this week we're going to be getting some very important announcements that'll certainly be market-moving events. So I want to get into it and discuss the timeline and what we can expect to hear from these very important announcements. All right, so first off, over 30% of the S&P 500 will be reporting their earnings this week, including some heavy hitters, including Alphabet, which is the parent company of Google, Microsoft, Apple, and Amazon. These are going to be four major reports that we'll need to watch closely, and these will certainly be a catalyst to move these stocks and, of course, probably the entire market. So those are just four reports that we need to watch, along with nearly 200 other earnings reports just out of the S&P 500 alone. So this is going to be a very busy week when it comes down to earnings alone, but those are just a few of the different reports coming out. Let's quickly talk about some of the other reports that are also going to be major announcements coming out this week as well. Now, you probably recognize as well, the Federal Reserve is meeting this week for their two-day FOMC meeting, which will be concluding on Wednesday, and then they'll be coming out announcing what they're going to be doing with interest rates going forward. Are they going to raise 100 basis points, or are they going to raise 75 basis points, or are they going to back off and raise 50 basis points? As of right now, the consensus is looking like most people are anticipating another 75 basis point rate hike, just like what we saw back in June 6 weeks ago. So we'll have to see what happens here, but here's what's interesting about it, and I actually talked about this in the last video that I posted just a few hours ago as well. But as of about a week and a half ago, the consensus was coming in that 83% of the people out there, investors, institutions, people like that were watching all this stuff, were anticipating the chances of a 100 basis point rate hike was at 83%. However, it's significantly less than that right now. In fact, the consensus across most people is that they're going to come in and do 75 basis points once again, just like they did in their last meeting. Now, again, this would be two back-to-back 75 basis point rate hikes that we've seen now. So we'll have to see what the Fed does here, but again, this is all in an effort to bring down inflation. Now, pretty much we already know that going forward in the report from this month, that was going to be released in the mid-time of next month, when we get that next inflation report, it's probably going to be a little bit lower. Why? Do I have some crystal ball, or how do I know this? Well, a lot of the inflation that we actually see is actually translated through energy prices. Well, we know that so far this month, gas has come down a lot, right? Well, as a result of gas coming down, that's going to bring down inflation a little bit too, because that's just, it makes up a large metric of the headline CPI number. So we pretty much already know that the inflation number for next month, or for what I should say is this month, that will be released in the middle of next month, will probably already be a little bit lower than the really hot 9.1%. Unless some things change here between now and the end of the month, but it's likely going to be a little bit less. And then, of course, we'll probably have all the different lawmakers coming out, running circles and saying, look what we did, everyone. We're bringing inflation down. Our policies are working. Not really. But anyway, that's just what we have to know as of right now. That inflation this month that'll be released in the middle of next month might actually be a little bit lower rather than actually raging higher. But again, we'll have to continue to see here what's going on with these oil prices and gas prices, because ultimately this is going to drive a lot of this inflation going forward, because as we've talked about before, basically inflation and prices on everything translate directly to energy prices, oil prices, gas prices. All of this is directly related to the price that we pay at the store on virtually everything else, because it's brought to the store by diesel-operated semis, vehicles, gas-operated vehicles, fuel-operated vehicles. Therefore, plays a big role in how much we pay at the stores on everything else. So that's another big report as well. Also on Thursday, along with Amazon and Apple reporting their earnings on those days, we also need to watch for the advanced estimates on GDP. Ooh, that's going to be a big one right there, right? So when we get this estimate, this first initial look at GDP for Q2 of 2022, this is going to give us the indication of, is the economy in a recession right now? Are we currently in a recession right now? Or did we skip right on by and did we possibly skip over a potential recession? Well, based on everything that we're looking at right now, it is pretty much inevitable that we are by far in a recession right now, according to the classic definition, which is 2 quarters back-to-back of negative GDP growth. Well, we already know that the first quarter of 2022 was negative 1.6%. That's in the books already. Well, 2Q is already done, and we're going to be getting that first advanced estimate on GDP on Thursday as well. Now, again, here's what's interesting about it. This is kind of funny, right? Now, again, this is not a political statement. I'm just throwing it out there because it's kind of interesting. The administration was already out, and they've been dancing around this whole topic and trying to change the definition of a recession. Now, here's the thing. For a very long time, very long time, we've been using the definition of a recession as 2 quarters back-to-back of negative GDP growth. That has been the classic example and the classic definition of a recession for a very long time. But now they're trying to change the definition. So in other words, they're trying to change the goalposts as far as how we're going to define what a recession really is. Pretty convenient, right? Just about when we're about to book a real recession right here in the United States, they want to move the goalpost and say, no, we're actually going to change the definition now. So just kidding, everyone. A real recession is defined by all these other parameters that we put in place as well. So they'll pretty much make it impossible to actually reach a recession based on their new definition. So kind of funny, right? Also, the Treasury Secretary, Janet Yellen, was also out indicating she doesn't believe there's going to be a recession. She thinks we're just going to skip right on by a recession. There's no threat of a recession at this time. I'm not really sure what she's looking at. I don't really know. She's also the same person that was out a year ago saying inflation is transitory. Don't worry, everyone. It's just transitory. It'll be gone in no time at all. Guess what, Janet Yellen? Inflation is still going high. In fact, we're still seeing 40-year numbers in inflation that we haven't seen in over 40 years. So, some economist we got here, right? Yeah, right. Anyway, just like Jerome Powell, again, the chairman of the Federal Reserve, saying something very similar a year ago. Oh, this is just transitory inflation. Don't worry, everyone. It'll be gone in no time at all. Here we are, a year later, and we're still booking 9.1% inflation as a result of the last report. So, yeah, somewhat of a transitory inflation report here that we've been seeing for the last year now. Yeah, right. So anyway, we'll have to see here. On Thursday, we'll be getting that official information for the GDP, and of course, I'm sure we'll see all these people dancing around the topic saying, oh no, it's not real. This isn't the real thing. The real definition of a recession is job losses, raising unemployment or raised unemployment, all kinds of different things. So they're probably going to throw all kinds of stuff at it and say, oh no, this isn't a real recession. But you know what? The definition that we've been using for a very, very long time is the same thing. 2 quarters back-to-back with negative GDP growth. That's what everybody understands a recession as. And again, it's going to be in the books here in a matter of just days. So we'll have to see what goes on here. But either way, this week alone is going to be a very, very, very important week as we get all of these earnings out of the S&P. We're going to be getting a lot of other earnings on top of that as well. We're also going to be getting this announcement out of the Federal Reserve as far as what they're going to do with interest rates moving forward. Are they going to keep jacking these things up? Are they going to go more aggressive? Are they going to pull back a little bit? And then, of course, that reading on GDP for Q2 2022 as well. And that's going to be a very big one. So all of these coupled together are going to be very important reports. These are certainly going to be catalysts to continue to move this market around. We're probably going to see quite a bit of volatility probably around the middle portion of this week, especially as we get those reports out of the Fed as far as the announcements on interest rates. And of course, when we get that official announcement on GDP, the advanced estimate here, and what it's actually going to come in at. So we're probably going to see a lot of volatility, even though this week so far has been a little bit muted. Hasn't been a whole lot of activity so far. Not a whole lot of movement in stocks or the market as a whole. But this is pretty basic. I mean, generally we typically see things like this. In big weeks like this, when we're going to see some kind of market moving event or announcement like this, it's not unheard of to see the market just sit around and do a whole lot of nothing for the first couple days of the week until we get those catalysts, and then we'll start to see some volatility coming back in. But again, as I mentioned in that video earlier today, this may actually be the next market moving event that brings the next leg into this market, either another leg up or another leg down. Well, if you've been watching the videos here on the channel for any length of time now, you probably know where I stand on this, right? Let me give you a little hint. Do you stand on a leg that goes up or do you stand on a leg that goes down? I'm just telling you my little perspective on this thing. But again, I could be totally right, I could be totally wrong, but based on everything that I'm seeing in this market and based on everything that I'm reading about what analysts and experts are saying right now, they're saying, look out below, because there's another big, massive move lower. And this bear market that we're currently in right now is certainly not over, according to everything that I've been reading on this. Now, again, I do like to read both sides of the case on this. I like to take both sides simply because, obviously you can't be biased in the market. That is not a good thing to do. But either way, I guess only time will tell here, and we will get a direction on this market very soon. It's been doing a whole lot of nothing here, though, over the last couple weeks. Yes, it's been going up a little bit, but is it really though? Is it really a conviction move behind what's actually going on right now? I don't know. I guess we'll have to see. But anyway, I'll keep you posted as we do get more details, but I want to lay out the timeline for you in this video, let you know what's going on this week, all of these major announcements, and again, it's going to be kind of a day of reckoning here, whether we take this market, the next rocket ship, higher, or we pull the rug out from under it and we see a much bigger move lower. So either way, this is all going to be it's going to be market moving information. And of course, this is going to be some very important economic data as well. Whether it moves the market around or not, it's going to be very important economically, because if we jack up interest rates once again from the Federal Reserve, that's going to be very important because it's going to impact virtually everybody. Now, again, at the same time, if GDP comes in and it's showing negative growth again, well, hey, check it out. Now we've officially booked a recession, right? So we've got a lot of different things going on here. Some major market movements and some major announcements coming this week. Anyway, hope this video helps you out to give you a better understanding of what's going on. As I do get more details of any of this or any other announcements coming out, of course, I'll be right here for you, breaking it all down, letting you know what's going on and how this may impact you going forward. So again, thanks so much for joining me. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos right here on the channel. Until next time, have a good one. Thanks so much for joining me, and I'll catch you again later.